Our Queenstown and Wānaka market update. The Australian edition, everyone. Very exciting. Nice to have you all here today. Now, my name's Richie Heath. I'm a residential sales consultant here in Queenstown, and I'll be your host today. And also, I'll be giving some updates on the residential market here in Queenstown. Well, we are joined by a fantastic panel of experts here. It's not often we get so many people from key industries in the property market here in one room. So I'm looking forward to where this goes today. It's going to be a little bit more casual here today. We're going to ask each other a few questions and we will go where it goes. So to my left here, to the left or to my right, I've got Dara Cantwell. He's the director from Custom Mortgages. He's a money man and he's a vital part of anyone definitely over in Australia looking to purchase here. We got Hugh Clark next. He's a residential sales consultant here in Queenstown and specialises in the managed apartment field. A lot of buyers from Australia deal with Hugh, so I'm looking forward to his insights. Now, next to Hugh, we've got Mitch Campbell. He's a residential sales consultant from over in Wanaka. Queenstown and Wanaka are very closely aligned, so it's nice to have him over here. People that are looking to invest in Queenstown also tend to look over the hill in Wanaka, so looking forward to hearing your insights. Next to Mitch, we've got Jenny Parks. She has been a leader in the space of short-term rentals departments for many years. She owns a company called Queenstown Collective. Hot topic, short-term residential, isn't it? So I'm looking forward to hearing from you. And next to Jenny, we've got Chloe Holiday. Now, she's the business manager and heads up pure property rentals here in Queenstown and over in Wanaka. And is looking, she does long-term residential. Now, that's another area which is very busy in the space of these markets. So looking forward to hearing from you. So well done. Thank you all for being here. Thank you for your time. Well, I suppose at the end of this, what we will do, if you've got any questions online, if you want to send them through at any stage, send them through, and at the end of that, we'll do our best to answer them for you. Well, Australian buyers seems to be a bit of a hot topic here in Queenstown, probably in the last, I reckon, 4 or 5 months. There has been quite a bit of inquiry and shift in that sort of property type market. Q, if I was an Australian buyer, what's the eligibility for an Australian buyer to be able to purchase here in New Zealand?
Yeah, look, that's a good place to start, Richie. Obviously, a few years ago, the government brought in the Residential Act to Overseas Investment Act to try and cool down our housing market. Most of us would probably argue it didn't really work in Queenstown, but that's what it is. But the good news is that if you're an Australian citizen or permanent resident, you can basically be eligible to buy as an Kiwi. There's a couple of little provisos around that, things like buying sensitive land, close to reserves and lakes and foreshores and things like that. But otherwise, welcome on board.
So we treat them like the fellow brother, do we?
Indeed.
The big brother. Mitch, Wanaka, thriving, isn't it?
There's plenty going on. There is plenty going on, which is fantastic. Look, to be fair to say, parts of New Zealand is going through some challenging times, but Central Otago, so Queenstown and Wanaka, and pushing to Cromwell, also Taras, Luggett as well. We're seeing some fantastic growth. Look, we are buffeted by probably some economic challenges, but we're seeing, look, it's a beautiful part of the world. It is absolutely gorgeous here. But we're a world-class winter destination, everyone knows that, but more so now the advent of mountain biking, even likes of e-bikes has extended people's ability to ride to, and I guess, an older age. More mature people, which is fantastic. Can be dangerous, so I just might add that in there as well. But what it means is we are a destination as well. So we've got the walking tracks as well, we've got the biking tracks, both here, Wakatipu and also Lake Wanaka as well. Beautiful lake for fishing and boating. So we're seeing, without doubt, strong growth still happening.
Get a lot of the golf tourism as well, golf speak as well.
Yeah, and look, I'm guilty, and my wife will be watching this as well, that I do love golfing trips, and that has been huge for I guess the Queenstown area. We've got probably the top 5 golf course to be built right now in Wanaka at a Glendew Bay.
Yep.
And there's proposed 2 new 18 holes out by by Wanaka Airport. So look, there's lots happening, which is fantastic. And we're simply bucking the trends.
So just in terms, Mitch, of how your market sort of sales inside, you've got a quick overview of, a rough, how many sales do you have per month? What sort of eyes are looking at Wanaka, and how long are the property on the market for?
Yeah, look, the last 3 months typically peak September, October, November, and also kind of February, March. The last 3 months, as we're coming to, I guess, a cooler climate now, we've seen average 40 to 50 residential house sales per month.
Yeah.
And that average price is kind of set between $1.5 to $1.6 million. Yeah. So look, that's been a steady increase for the last 7 to 10 years, which is fantastic. Look, I just saw recently these pressures, especially in the Sydney market, but we're still seeing significant growth in our market. We've got land over in Wanaka, also especially in Lake Hardware as well. So look, if people want to build, our job is to connect people. So.
Yeah, and that's one thing probably we are a little bit short of here in Queenstown is land. Again, we are quite geographically challenged in regards to where we can actually build, being surrounded by mountains and a lake. Our Queenstown market is very similar to yours, and again follows the trends of Wanaka and Queenstown are pretty much the same. The rest of New Zealand probably over the last couple of years, I would probably say has been, the market, the property market hasn't been so good. For them, there has been sort of a lot of areas like Auckland and Wellington that have sort of dropped in sales, whereas we're a funny little bubble over this side of the end or bottom end of New Zealand. Queenstown would probably transact around 80 on average, 80 properties a month. So again, if that sort of relates to 60 to 70 in Wanaka, there's not a whole lot of transactions happening, but due to our location and what we have to offer, there's always a lot of eyes looking. So that's why we find that we tend to have our sale prices tend to be a little bit higher, because a lot of eyes, but not really a whole lot for sale. Our days on market sort of average anywhere between 30 to 40 days, I would say, for a residential property, and our sort of average sale price, it's around that 1.6-ish, and that's steadily increased over the last sort of 10 years. Yeah, so a lot of eyes on Queenstown, and of course we're in Wanaka, just a tourist destination. So what is being a tourist destination, what does that mean for a long-term residential market, Chloe? How does that sort of fit? What do you see here for availability of stock and people wanting to purchase and various things like that?
Yeah, so in order to support the crazy tourism market, we need a lot of employees to be able to operate. So we do see a lot, net migration is very high. So that's predominantly what we see with our tenant pool. A lot of people relocating for the lifestyle and enjoying it for themselves. So, coming from other regions in New Zealand to secure a piece of paradise here and try out the lifestyle and see how it all goes. But yeah, we've seen, a huge increase in availability over the last few years with the construction sector. But we're finding that demand's been absorbed by people needing to rent. So yeah, it's been an interesting few years.
Short term, Jenny.
Yeah, it's been a very busy sector the last couple of years. The main thing I've noticed over the past 10 years is just the peaks and troughs that we used to have kind of ironed themselves out now. You definitely get a quieter period in May and June, but the rest of the year is pretty strong with visitor numbers now. You've definitely got a peak in July, school holidays, and then the summer as well. But we very much used to be a winter destination. We are, as Mitch was saying before, very much an all-round destination now. You've got a lot of people coming here for mountain biking, for golfing, for the great walks. So I think, yeah, it's just a lot busier year-round than it ever used to be. Like, it used to be very noticeable in shoulder season here. There were tumbleweeds going down Shotover Street, and businesses would close for a month and have a break, and that's just not a thing anymore. So yeah, it's been going strong, and visitor numbers are growing year on year. So I don't see it slowing down.
Do you find that sort of each month or every couple of months, there's different parts of the world that would travel here? Let's say in one month we may have more Chinese visitors, and other months we may. What sort of trends do you see here?
Yeah, absolutely. Winter market's definitely Australian. Like 90% of my guests at the moment are all Australian. We love the Aussies. They tend to come here for a good period of time and spend good money, which is great for the economy. Chinese is very strong in summer, and Malaysia, a lot of Malaysians traveling, people from Singapore as well. Summer tends to be your shorter stays, 3 to 5 nights on average, whereas winter we do get a lot of 7 to 10 night stays, which is the stays we want to attract. So we do love the winter bookings. It's less turnaround expenses for owners as well. So we always try and encourage those longer stays. But overall, it's, yeah, Aussies do our biggest market by a long shot.
I was just digging up some numbers before, Richard. We had 3.5 to 4 million visitor trips to Queenstown every year. So it brings in what's it, $2.8 billion worth of money into district. So if you're looking for somewhere to invest in, this is, you know, as Chloe pointed out, we need accommodation. Yeah, love it. So it's some big numbers there.
And some big numbers, isn't it? And what sort of trends are you seeing over the hill there in Wanaka there, Mitch?
There's definitely in the last, let's say, 3 to 5 years, 2 types of buyers we're seeing, especially from Australia. They're looking for that lock up and leave 1.2, 1.6 million dollar property. They literally can drive in, open the door, turn heating on, they're away, drive out, easy. But now more so, which I find quite interesting, so my parents have probably went through this process as well, is the empty nesters. So we're seeing people downsizing in the city, their family home, the kids have all left home now. And so they're ma and pa walking around a big house going, why have I got all this capital tied up in a home in the city? So they're buying bigger quality homes. So instead of a rush 1 or 2 days or a weekend seeing their kids, they're getting more quality time by buying a property for me, into Wanaka. Kids come here, go skiing, go out the lake in the boat. So we're seeing a real change that people are downsizing cities and buying bigger quality homes into, especially Wanaka we're seeing. So that is a market. But there's some big events on, especially Wanaka. I'm not sure if anyone's been reading. Santana have got a big mine proposal going through at the moment. We're really watching what that does to the market. That with how many staff underneath that could be, into Cromwell and Wanaka region, and especially Lake Harwe. That's a big one. Couple of golf courses could be going through as well, so it's another one as well. Look, we've got elections coming back into this year. Kiwis are pretty reserved people. We found the Aussies a bit more go-getters. So Kiwis maybe sitting on their hands at the moment. There's an opportunity for Aussies to come in.
Yeah. We normally see is that when we come into an election cycle, every time that happens, the property market slows down for a few months. Coming into that, we've seen that over here in the Queenstown market. People tend to sit on their hands and wait to see who's in power, depending on what their policies are and so on, and then make movements from there. That's what definitely you guys seen that. So obviously in the managed apartment sector there, Hugh, do you see sort of, are there any sort of, does that affect the managed apartment or sector or not?
Yeah, it does a little bit. So I mean, there's a few people, they also watch their interest rates, as we all do, going up and down, because that can affect sort of the yields you get from that. But the managed apartment seems to kind of tick away all year long. I mean, my inquiries, 60% from Australians at the moment coming through on those managed apartments, total inquiry, and sold 4 in the last 6 months to Australians over here. So that's an all year round thing. Look, it's classic, isn't it? They come here, they come for a ski, they want to buy a property here and come and use it on holidays, can use it for ski holidays.
So what defines a managed apartment? Is that just something that you can run Airbnb out of, or what sort of constitutes a managed apartment?
Yeah, the ones that, we've probably got a couple of different types, because probably one of the key conversations we'll get on to is visitor accommodation consent, because that's a massive topic in Queenstown regardless. But you've got properties that you would have with someone like Jenny that's managed for you. You've got a bit more flexibility about terms of use. And ones we see in true managements, they're more like a hotel. You come and stay in it, and standard suites, which I can see on the window up here, the delivery across the road, things like that. You stay in it, it's total hands off, so it's peace of mind. The management looks after it for you, And then at the end of the month, they take away all the costs and you get a share of the income. But you also come and get to use it for 30 usage hours. So that's like $3,000-4,000 in combination savings and possibly more.
Yeah.
And you come and use that. And you have a sort of piece of Queenstown for your own.
And do you find that sector predominantly is looked at outside of New Zealand to be Australians, as you say? There's obviously a lot of Australians that want to get into this market and come over here. Some of them come 3, 4, 5 times a year.
Yeah.
So a good investment, obviously. Or is there a lot of inter-New Zealander people that own managed apartments as well?
Look, it's a good question. I'd probably put it at 50-50. But we are seeing an increased inquiry at the moment from the Australians looking at that sort of thing because it just suits them perfectly. But a lot of your Aucklanders, Wellington, Christchurch come down here, and have something here and they can go back. That's been on holiday. Or it's just a little investment that just takes away.
So that you're quite numbers based in regards to selling managed apartments on returns.
Yeah, data geek, as I like to say.
Yes, you are. Whereas some of us selling townhouses with a visitor accommodation more around the feel. The feel that sort of sits here.
Emotion.
The emotion, you see. So we'll see what happens. We'll put that out here. Is your sector affected by interest rates fluctuating?
Very much so. I think it's fair to say that having a bit of that peace mind, that hands-off thing does come at not a cost, but they're not particularly high yield properties, like whether you put your money in a bank or shares or whatever.
So is that due to everything being covered as part of that investment? Right. So what's covered as for
what I'd call a typical management contract is the gross amounts come in, the management would take care of, or they have a management fee, obviously, and then all your cleaning costs, sky, power, gas, all that stuff gets deducted as well.
Mm-hmm.
And then they'll put a deposit in your bank account. And you basically got 2 direct expenses after that, as those costs, which we always take into calculation, is your rates, local rates, and body corporate fees.
Mm-hmm.
Body corporate obviously looks after the building, the insurance. That's a whole nother webinar conversation. And then at the end of the day, you've probably got to calculate some GST as well. So GST is another one to cover off. Any property that is a short-term activity attracts GST, because our government loves that. Long term, like with the property, that's not a GST taxable activity. So there's a little bit of that to factor in as well, and then you end up with a net amount.
So Jenny, in regards to being slightly different than a managed apartment, the benefits, I suppose, of having you run a property in Queenstown, what would the differences be?
I guess we're similar in the way that we offer a full management solution. So everything's taken care of, from maintenance, guest management, financials, all of that. I guess there's a lot more flexibility around owner usage. So a lot of my clients come over here for, a couple of times a year, or some only once a year, but there's that freedom of when they can use it. Obviously, if they're coming during peak periods, that's going to, have a big impact on their returns. But most of them tend to come in the shoulder seasons and utilise it then and do some upkeep on the houses and things like that. So sort of similar, but I guess, just a lot more flexibility than typically a lot of the management companies.
So if I own a property here in Queenstown and Wanaka, and I wanted you to run it, I owned the property, what do I need to do as an owner? Or what do you need to do to help me as an owner to be able to run it on Airbnb as much as I like?
It's small things. It really is present the property, give it a bit of character, give it a bit of personality. I think a lot of people are afraid to make their place a little bit different and stand out, but guests absolutely love that. If something's just even funky decor, add some colours, add a hot tub, things like that. All these little things that guests love just help it stand out, because it is becoming an increasingly, I wouldn't say crowded market, but it's a lot more competitive than it was 5 years ago. So guests used to have, not as much to choose from, whereas now there's a lot of property to choose from. So make your property stand out, have the features that guests love. The 2 biggest things that guests look for are Lakeview and proximity to town. I feel like that's always going to be, the top 2 criteria. People want to be able to soak up the gorgeous views that Queenstown's famous for, and they want to be able to walk for dinner and go and enjoy a drink after skiing and not be too far out of town. So yeah, they would be the most common, I guess. The houses that have those features are the most heavily booked. Houses further out of town, some people prefer a little bit of peace and quiet, but they don't have the same returns as ones in town.
Yeah, so the returns definitely vary.
Yeah.
On locations.
Yeah, absolutely.
A lot of chat around at the moment around visitor accommodation consent. Visitor accommodation consent is if you're wanting to run your property of more than 90 days on a short-term Airbnb type basis, you need to get yourself a visitor accommodation consent from the local council. There's a few various loopholes that you need to jump through to get that consent. So that's something that you would have to require to be able to do your.
Yeah, I've got a couple of owners that just have the 90 nights. They're typically the more high-end properties, and they don't want a lot of guests. They just want the higher value bookings and less of them, which that works for them. But for the majority, especially if you really want to get as high occupancy as possible, you need to get that consent. It's definitely something that has become trickier to get over the years. I would highly recommend talking to a planner. We've got some great planners in town. Even if you're just starting to browse properties available and it doesn't have consent, have a chat to them about what is the likelihood. They know all the neighbourhoods that are more likely to be granted consent. There's certain areas like Jack's Point, Hanleys that have restrictions across the whole area. The closer to town you are, I'd say more likely, because I think there's a bit of a focus on some areas being more residential areas. But it also comes down to neighbour approval, how many other properties in that area have the consent. And what a lot of the planners do now is, even if an owner was trying to get 180 nights a year, they'd apply for the full 365 in the hope that they meet halfway and get the 180, which seems to work quite well. But there's a whole lot of criteria that needs to be met. But yeah, the planners are really good. They know the rules inside out, and they're just happy to provide that advice really before you go too far down a track and perhaps it doesn't get granted.
Yeah, absolutely. And I think that process roughly costs around sort of 10,000, 8 to 10 to 12, depending on where you are and what you do. If we talk in very general terms, 2 types of visitor accommodation consent, depending on the underlying zoning of the land. If it's sort of a medium or low density residential, you would probably be granted 180 days. It's actually 179, but 180 sounds better. And then if you're in the high density zoning in town, more in town, you can apply for 365 days. If let's say I had a 365-day visitor accommodation, as opposed to 180 days, Jenny, am I doing 365 days, or if I did 180 days, am I still doing pretty well?
Totally depends on the property. You'll find your smaller apartments, again, locations, everything. We, sometimes have properties that we're doing over 300 nights a year with no trouble. Majority of my clients that I work with now want the higher quality guests, less bookings, less wear and tear, less upkeep on the property, but still getting a really good return because you're just charging those high nightly rates. Everyone's very different. Some clients are very driven by their occupancy percentage, and they want it as close to 100% as you can get, and a lot don't. They're happy to sit around the 50 to 60%, which I think is a pretty good medium for a house. Apartments tend to be higher. Apartments, you probably expect 70 to 80% occupancy, but everyone's very different on their, how they want to run.
2 types of investors really. It seems that there are people here looking for long-term rentals and people here looking for short-term. So what's the advantage of long-term rentals, Chloe? Is there flexibility in that? I mean, what sort of rental terms generally you push out there?
Yeah. So it's strength to strength at the moment, and what has happened in the last year or so is they've actually reintroduced new no cause termination. So that means that people can have a rent term, and that for it to expire at the end of that rent term used to have all these rules around providing notice. So we're finding a lot of short-term owners actually utilising us for a medium-term rent. So for about 9 months while they're not here, and then they can move back in after that for a few months and use the property. It just means they've got consistent returns. So you know what you're getting each week, and it's relatively low maintenance in the way that we sort everything with the management side, and you're not paying for utilities or any of those extra services. So it's just a nice way to know what you're getting each week, and easy way to go about it. Yeah.
And of your owners, your pool of owners, do you have a few from Australia?
Yes, we do. It sits around about 18% of our owners of our current portfolio. So, and we are seeing a lot more interest, and especially those who are potentially looking to move to New Zealand in the future. They like to secure a place, put some tenants in there for a few years, and then choose to move back. So, yeah, seeing a lot more of that.
And Mitch, over the hill there, long-term versus short-term, what sort of trends are you seeing for the stuff that you're selling?
Russ, like half the properties we sell are holiday homes. So
Right.
you drive around at night.
So are they just pure lock and leaves, no one in them unless the people are here?
Well, the EBIT now, because you get 90 days by default in terms of
Yeah.
short term, people may, I guess,
Do it.
if they can cover 10, 15K, that's going to cover your rates insurance for the year. So some will do that, especially some of the Australians who don't need the hardcore investment. They want to come and use it.
Mhm.
But look, if they can cover some of their hard costs, that's fantastic. But big thing for now, what we're seeing with especially the Australian market is, look, right now, their tax laws have changed from 1st July. Exchange rate's best it's been for a long time. So there's 10, 15% are safe at the moment. Look, our market is still, it's been shown it's been pretty strong. We're not in decline. So there's an area to invest into, stacks up pretty well. Look, banks, and I'm sure Derek can allude to this further on, banks are looking to lend into the Central Otago market. So 1% cashback rate for buyers. So look, a $2 million property, 20K cover the first couple of years in terms of your rates insurance. So look, a lot of things are stacking up for the Australian favour right now. So look, yeah, align yourself with the right person and start asking those questions.
Well, we might throw it over to the money man. Now, obviously you run a very successful mortgage broking business here. What would be your advice for an Australian buyer? Generally what we do, to be honest, is if we get a lot of inquiry from Australia. We're obviously not financial advisors. We kind of think we are, but not really. We will pass the bucket over to you. What sort of discussions do you have with them on the process of being able to purchase here?
Thanks, Richie. Yeah, and just I guess to mimic what everybody else has said so far, we've always seen a lot of interest from the Australian market in our Queenstown and Wānaka market, but there's certainly been an increase since the May budget announcements regarding capital gain, as well as our interest deductibility rules and things like that. So it seems like the perfect storm for our market and for Australian buyers to come here. As far as advice, I would say reach out early. The banks all have different rules regarding how they assess Australian buyers. For example, you might find that if you're a self-employed Australian that walk into one of the banks here and asking you have a mortgage, you might be told no, when in fact there's an absolutely yes out there for you. So get in touch early. Take accountancy advice. Ownership structures are probably pretty important. For example, you might want to buy a property in your super fund name. We have some pushback on that ownership structure with the bank, but there's workarounds in place for that. So if we can tackle that issue pretty early, it'll just go real smoothly when it comes to getting your IRD number, getting your legal advice, and pushing the transaction over the line so that you get into your nice new Queenstown home.
Yeah.
I think one of the things you've raised in there is good as perhaps what a lot of the Australian investors don't realise, because we've already got it here, is you must have an IRD number before you can transact on property in New Zealand. You must have New Zealand bank account, and many of those banks as well, they will require you to be here in person for their own health purposes. I recently had a part of a soldier was trying to buy it. And then at the last minute, they made his wife fly over to see her in person here in the Queenstown back. So you need to get all those things ducks in a row first.
Absolutely, yeah. That can, I mean, some of the banks will actually will identify you remotely, but some of them won't. And that's sometimes the advice that we give to people is before you jump back on that plane and go home, in case you want to settle on this property before you come back, you need to just pop in, and it might be just a case of showing your ID to somebody at the bank, 2-minute job, and then away you go, and you can go back up the ski field or whatever you're doing that day. I think, yeah, like just to reiterate, like just surround yourself with the professionals that know what they're doing here. So, like mortgage broker, real estate agent, solicitor, and then your short-term and long-term rental person, depending on what you're looking at, so that it's all sorted for you. But the big message is the banks are very bullish. They're really keen on Australian buyers. As Mitch alluded to, there's some pretty favourable cashback agreements where you get paid cashback of you said 1%, that might be a bit heavy-handed, but 0.9% or so, depending on the deal. So that equates to like $9,000 or $10,000 per million that you're borrowing. Currently, that's
Holiday.
Yeah. So and by the time you factor in things like that and stamp duty and everything else that we've discussed today, it's actually pretty attractive to buy here.
Yeah, so I mean, obviously, it sounds like the as you were talking with the government changes, it's quite oppressive over there to be able to. Why does our market look better? What don't we have that they do over there for people who are buying property?
Look, a lot of our properties I sell, it's emotional buy.
Yeah.
You've got one life. So, and I had a comment earlier that, look, we're about creating time, buying property over here, creating memories. So, look, you can sit at home and watch as much YouTube as you like.
You can put that on the side of your car.
We won't go that far. But look, if you're opportunity in life, look, if you're in a position to do it, you won't regret buying into this amazing part of the world. So, look, our job is help facilitate that. I see myself as connecting people. So, lots of Dara, the ladies here as well in terms of short, long term. Kind of reach out to us and we'll help you kind of steer in that right direction. We love what we do, so if we can help make it work.
Yeah, absolutely. I think definitely over the last few years, we've all had to work closer together because we're all become an integral part of the system. I know when we're selling property, we always provide a long and a short-term rental agreement appraisal as part of our package sale because our buyer pool is 50% from either or, so they want to know that. The banks obviously need to see that. Do they take the let's say, for example, a short-term rental appraisal? If I was buying a house and gave that to you, do they look at that? How much of that do they sort of take on board?
Yeah, well, I mean, so they look at the whole package, all your commitments back over in Australia, and you're including debt commitments and all your income streams, and then they look at your the potential for income here. Some of the banks might take a conservative view and go, well, if they long-term rented the property, they get this. But we're moving towards the banks being like before COVID, the banks were moving towards or just about to start incorporating short-term rental income into how they assessed debt, and I think that we'll get back there again. So that if you do have like just a really high performing long-term rental VA consent 365 VA consent property, that you can actually utilize a lot of that income to get debt servicing over the line with the banks.
And is that showing the history of the property?
But certainly if you've already got a history, then we can already use that. So if the previous owner, for example, is happy to share financial information about the property that you're buying, then we can use that. Worst case scenario, we take what the long-term rental opportunity is and roll with that. And if that's enough to get you up the line, that's fine. If we need to push it a bit further and try and use some short-term rental, then we absolutely can look at that too.
So long-term rents, have been very strong here in the Queenstown and Wānaka region. How far have you seen rents come, Chloe, over the last 5 years?
So-
Let's say 5 years.
We were looking at some stats yesterday, actually, and in 2015, the median rent was $450. It's now sitting at $900. So it's a pretty extensive growth there. And I think it's important to see how resilient we are compared to the national market as well. So same with the residential sales, we're just in a bit of a bubble in a league of our own, really. So the growth from 25 to 26 is around 10% for the rent increase, whereas the national average actually dropped 1.9%. So we are, you know, and that's been quite consistent for many years since COVID. So it's been really, really great to see. And even with the stock coming onto the market, we're still seeing that growth and that demand. So that's really great. But yeah, I always recommend, if anyone's looking to purchase and they see a rental appraisal, you can just give the property manager or whoever provided that appraisal a call, just to talk about the, you know, because everything changes, and it's good to know exactly what return that you will get and vacancy period. So you can demand a higher price, but it might mean a longer vacancy period. So we can work with you to create a strategy that works for you in that property.
Jenny was talking about how she, it's not so seasonal, but used to be seasonal in regards to sort of highs and lows and occupancy rates. Do you have a seasonal part of your long-term rental at all, or is it just always full steam ahead?
It used to be a lot more significant around the May, June time, same as just before the winter period. But what we've found is a lot of the tourism operators actually have purchased their own property to house their staff. So we're not seeing that so much, but also we're actually seeing an influx of construction companies needing to house their staff to support the developments in the region. So that's been quite significant. So there's still a lot of staff housing going on, but it's actually changed industries to more those areas. Yeah, so it's been quite good.
Thoughts on the importance of using a local property manager if you were out of
town?
Yeah, out of New Zealand.
So we operate under the Residential Tenancies Act in New Zealand, and if you are an owner who is out of the country for 21 days or more, it does mean that you need to use a New Zealand-based agent. So that's why we're here to help you. Generally speaking, most of our services are deductible as well, which can kind of make it a bit more attractive, but it's very nice to have someone on the ground able to assist you with your property, knows the market, is there 24/7 if you need anything. So yes, there's a lot of advantages there for using us.
And with you, Jenny?
Yeah, it's likewise. It's having someone on the ground.
Yeah.
You know, there are people that try and do it remotely, but I don't think they understand how much work is involved. There are a lot of moving parts in both long and short term. And I just think having someone on the ground that knows the market and is just there 24/7 if something arises, because especially in winter, you do get issues in a cold climate, and it's just having someone there that can sort it right away before before it turns into a major problem.
Yeah.
If it's something like a burst pipe or, those sorts of
And
things.
it always happens at 12 on a Saturday.
Just not enough to sleep.
Yeah.
So if we were just talking very generalised fees, for example, if I had a rental property here in Queenstown, what roughly would I be looking to pay if I was to put my property into long term?
Average around 8% of the rent collected, and then we have
Of the weekly rent?
rent, and then we have inspection fees. So we'll go out in accordance to your insurance policy, which is around 3 months, and conduct a routine inspection. That's usually around $60 per visit, and that's conducted every 13 weeks or so. And then maintenance scheduling fees. So for those times that we need to coordinate maintenance, there's a percentage on that one as well, around the 5% mark of the invoice. Yeah.
And for finding people for the property, do you vet them? How does that process work?
Yeah, so that's probably the most important part of our process is getting the right people. So we conduct the viewings, and then for any applications that come through, we do extensive credit and background checks. We find some very interesting things from people, and then also do quite a lot extensive reference checking as well. So from their previous or current landlord, and get a really good thorough understanding of who we're putting in your property. So
It's good to help you sleep safe at night.
yes.
And Jenny, if I was looking to do a short-term type thing with my property, what sort of fees are roughly involved with that?
They do vary, both short and long. It's a very competitive space in Queenstown, like there's no shortage of operators. I would say 20% plus GST would be your middle of the road. Everyone's doing the same thing, but quite differently. Some will have all-inclusive fees, some won't. Some will charge extra marketing fees. So everyone has a different fee structure. We try to make ours as inclusive as possible because no one likes all these hidden charges, right? And just helps people plan ahead as well. So 20%. And what a lot of people need to take into consideration is the OTA's commission, because they can charge Booking.com 17.2%, for example, if you do the payments. So you've got to kind of counter that into, your pricing structure as well. And a lot of owners don't sometimes quite understand that we have to adjust the prices for certain channels to make sure that's covered and that they're not covering that, because if you don't adjust your prices, that's added on top of a 20% management fee. That's substantial.
So GST, how's that changed in the short-term residential
It's my
space?
favourite subject. It's pretty complex in the short-term space, to be honest. Definitely recommend getting good tax advice and having an accountant. Basically, 2 years ago, the legislation changed, and there's now GST with the online marketplaces. So you can either kind of opt in or opt out of those rules, depending on the size of your company, how many nights and revenue, etc. But basically, we're collecting that GST now on behalf of clients for the booking value and submitting that to IRD or the channels such as Booking.com, Verbo, Airbnb are doing that. It is quite a complicated space. I'd say there's still little teething issues 2 years later. Yeah, so it's been a big adjustment. I think it changed very quickly, and a lot of the software had to really scramble to try and keep up with the changes that were made.
We've seen the same in a lot of the management agreements and the returns information that comes through from different complexes. Some of them are paying it out, other ones they only have to pay the GST directly.
Yeah.
So all over the show.
Yeah.
So getting that accountant's advisors is key.
Yeah, look, GST is a big one, I suppose. Over here, it's 15%, isn't it? So it's a reasonable chunk that comes out. Now, my understanding of if we have a property and we're looking to short-term Airbnb it, if we make over $60,000 gross, we then get encapsulated in the GST threshold, which affects the managed apartment and the short term there. So do you have people that don't want to be caught in the GST threshold? How do you manage that?
Yeah, absolutely. To be completely honest, depending on the type of property, it is incredibly easy to hit that 60K within months, if not less. So the option then is to put it into long term for the rest of the year. But I mean, most property managers and tenants want a minimum of a 12-month lease. So that's not sometimes as straightforward. Or otherwise the property sits empty. I've got properties that sit there empty for a good chunk of the year because they don't want to register for GST. But then also from a management company's point of view, they're not profitable either. While it's sitting there empty, no one's making money on it. So it's an interesting one, but everyone's situation is very different, and that's why it's just so critical to get that good tax and accounting advice.
Yeah, so just going back to the residential house, why some people don't want to go over that GST threshold is if they then choose to sell their house in the not too distant future, they'll have to pay GST on their final sale price of the property. and they may not have actually made much on the Airbnb on the way through. So you find that most owners, I would think, if they are going to register for GST, would lean into it and try and make as much as they can. So long-term residential, there's no GST applicable to anything. You can just make as much as you like.
That's right.
Hassle-free, mate.
Hassle-free. Yeah, no, it's a very hands-off approach to investing, and yeah, a lot of people do value that regular income and consistency. Yeah.
Yeah, and look, with the rents being reasonably high
Yeah.
here, they
Yeah.
would, an annual sum would turn out to be quite a
Yeah.
reasonable amount, not having GST applicable.
Yeah, we are looking at around 3 to 4% yield across the board, but this is obviously dependent on the property. But yeah, and then you get the benefits of the capital gain as well. So yeah, and you get really good quality tenants as well. So they look after your home well. And then of course, if your situation changes, there's options there, and and you can choose to do things that you need to do.
And with lending, how does that differ much? And if you're looking at someone, a purchaser who was looking to purchase an Airbnb solely to, generate income as opposed to a long term, what's the difference in that space?
It does make a difference to if the property has been captured under the GST net. It does make a difference to how the bank will value that property, as then they will take the 15% haircut off the value to incorporate the fact that particularly if you're buying a property that initially isn't GST registered and then you plan to claim the GST back, then they will discount the property, so that affects how much you can borrow against that property. That's probably the main difference. But as far as normal treatment and income, obviously long-term rent is pretty straightforward and usually a little bit lower. Airbnb and things like that. They just look at the ex-GST amount and soldier on. Yeah.
You find that is there a difference in a deposit payable to a bank for a loan if you're going to purchase a managed apartment? Is there a difference? I remember a while ago, if you were trying to buy a home, you need 10 to 20%, and if it was a managed apartment, the deposit needed to be higher. Is that still the case?
Well, we've had cases before where I've been dealing with clients that still directly want to go to their own bank, and I've put them onto Dara because their bank has said, look, that's a commercial property. 40-50%, whatever the deposit does. Get them to Dara, who can find the right bank who looks at it a little bit differently. So that's a great rest of the year we've got across the line with clients.
Yeah, there's properties around the Queenstown area that are zoned commercially, but they're quite residential in nature. And that it's just another example of different banks looking at things very, very differently. And you might get an absolute no to that type of property on a residential basis for most of them, and then one or two banks are actually pretty bullish again. They understand that the nature of that property is residential. As far as managed apartments and deposits, that does vary, and things that the bank want to understand is the management agreement and management lease term and things like that. And typically, maybe a little bit more on the deposit side of things. Like you might be looking between 30 and 40% as a deposit. They also look at the size of the apartment. So some banks have a minimum size. So if it's a smaller apartment, smaller being under 30 square meters, then that's a little bit more of a challenge, which we may get done with a non-bank.
Yeah, that's still cool. We've come across that requirement before, the studio apartments. Yeah, so I can turn up sometimes.
We're seeing quite a bit of a change, probably in the last 2 years, around developers coming to the Queenstown area, especially in the Queenstown area. Wanaka as well, Mitch.
Yeah, absolutely. What we've probably seen, probably in the last year and a half, is possibly an oversupply of apartments or townhouses in the bigger cities. And those developers have now moved into the likes of Wanaka, purchasing old land, typically older houses, 50, 60-year-old houses, bowling them over, and they've put up to, in some instances, 4 units on one side, so down to 250 squares. So that lends itself to that kind of lock-up and lead product that potentially Australians will be looking at. We're literally close the door, drive away, it's done. Then short-term accommodation, that just suits perfectly. Those typically are closer to town too, so the walking distance. Judy mentioned before, if you walk to town, you beer for your dinner, that works well. A lot of those older properties are close to town, where new subdivisions are kind of further out of town. So that is definitely a trend we're seeing. Older properties getting bowled over, more kind of apartment townhouses being built, especially in Wanaka.
So with those older houses being knocked over and the large land holdings becoming a bit more, people want a bit more in demand, how are you seeing pricing of those old crappers?
I'm sure it was someone's love at some stage. But I think has moved on and building work as well. Look, it is land value within a town, especially in a township stuff. It is land value. And we work quite closely on a project at the moment that we've got under contract. It's purely just a square meter road. So, and the developers will work out how many spots or how many apartments they can get on site, what's the parking like, and then it comes out to location.
Yeah, well, that's probably been the biggest change for us over the last couple of years, I'd say, as the developers come into town. As Mitch is saying, here in Queenstown, some of the older, colder houses in the Queenstown CBD location, are originally on bigger sections simply because that's, we were a small town not too long ago, to be fair. So a lot of those sections were a reasonable size. The zoning under those also is quite desirable. A lot of the CBD stuff here in Wanaka are the sort of a high density zoning, which enables a developer to purchase and put X amount of townhouses or standalone homes, whatever they want to do on that. And we've seen some big movements in the space over here of late of a lot of developers purchasing old homes for quite high prices. And that's really sort of skyrocketed a lot of this in town price point for the market considerably. And I sell a lot of off-plan townhouses to work with a few developers here in town. Colleagues do a lot of that. So these townhouses are in high demand, especially if they have a visitor accommodation consent. That's real. Lending for a developer, do you see much of that happening around here?
Yeah, quite a lot, and quite a lot of demand coming from Australia in that respect as well, where again they take a plot of land or older building and plan for redevelopment, either one or two houses or often multiple units. And there's plenty of options for that out there. Some of that would be more non-bank, but certainly some of the banks are actually pretty interested in that space, but the non-banks are certainly keen. And from a non-bank point of view in that space, you may be able to capitalize your interest costs. Like usually they are looking for a little bit of equity in that case, so like a little bit more equity than maybe you might have if you were just buying a holiday home, for example. Good exit strategy is probably the key. And so, if you're doing multi-unit developments, you might just want to get a pre-sale to get it off the. Not always, but often that'll be the key to getting things underway.
Yeah, absolutely. And we're also seeing a key to those developers is to be able to secure a visitor accommodation consent, and that actually can be the dependent of the success or the failure of the development. I know that there's been a few developers that have purchased put property under a due diligence, and if they can't get the visitor accommodation consent, it can mean up to $250,000 per unit if they can't get it, if it's something close into the CBD. So, well, we're about to wrap up, team. Have you got any last words that you'd like to impart? Mitch, we'll start with you. Anything else?
Look, if you're genuinely looking and serious about purchasing over this part of the world, Central Otago is a beautiful place. But reach out to agents, have a good brief, know exactly how many bedrooms you want, what's your budget, do you want views, do you want to be walking distance. So a really good brief is key. Line yourself with a good agent or a number of agents in town, but also then either use them to connect you with, in terms of a mortgage broker, early in that regard, so you're sitting in a position so you know where you stand. Then definitely speak to the ladies to my right here, knowing exactly what returns you can get, puts you in a really good stead. But there, like I say, people don't faff about it. Just do it. It's, yeah, you won't regret it.
Yeah, very similar thing. I think if we're here to help, here for advice. We've been doing it for a large number of years to remember Richie, and that's where we start pointing you in the right direction with Darren and team, and local solicitors, banks, that sort of thing, so that you can get all your ducks in a row. That's the key thing. And then we've got all the property to have a look and what's right. Jenny?
Yeah, similar. Just reach out, have the conversation. I'm always really happy to help potential buyers. You know, just assess the property. Is it going to work in short term? Does it have the features that guests are looking for, and what kind of returns that it will generate? I'm very honest, so I'm always more than happy to help if you're at that stage and you just want some advice. Don't hesitate to get in touch.
Yeah, same. We're here to help, and we're able to work with you with your personal circumstances as well, and just to see how it can work best for you and come up with a strategy that helps you best and enjoy being based here. Yeah.
Yeah, reach out early, get the ball rolling before you get here, and that allows you more time to actually do some of the fun activities that are available here. Speak to your accountant in Australia first, but possibly also take advice from an accountant here, and get in touch with us by Teams call, and get the ball rolling early.
Right, a couple of quick questions for our panel. From Samantha, how much have homes, not apartment prices, risen in Queenstown and Wānaka area over the last 3 years? And where do we see that going in the future?
Look, fair to say post-COVID was when the market really boomed. So 22, 23 was probably a real peak. We've been pretty flat lying. So different pricing structures showed better growth, but we've been pretty flat since that kind of peak, 22, 23.
Yeah.
But look, like I said earlier, that kind of 1.2 to 1.4 entry level market has really gone really, really well for us. So as first home buyers, or potentially can be that Airbnb option for out of towners. Look, again, bigger stuff. A couple of big deals going on at the moment in our office. It's, look, 8 to 10 million, you think far out 3 or 4 years ago, that is much more, I guess, realistic these days. We're seeing more of that. So it's, yeah, look, we are, it's a playground. So if you can make it work, it's fantastic.
Yeah, absolutely. I saw some stats around the Queenstown market that the capital gain is around 6% a year. You talk really sort of basic numbers, and depending where the property is and what property type it is. If it's an old and cold one but under great land, that capital gain could be massive compared to what it was bought because of the zoning change. Another one from Stuart. He understands that there's no capital gains in New Zealand, which is great. He's just wondering whether that actually helps an Australian tax residents buying a property in New Zealand. His understanding that an Aussie tax resident gets taxed on their worldwide income and therefore will still pay capital gains in Aussie on the eventual New Zealand property sale. Just wonder if anyone had any insights on that.
Probably the only thing to clarify there is we do have the bright line test. So if you're selling a property within 2 years in Queensland, you will pay a tax on that. Yeah, which sounds like a capital gains tax. But
yeah, it's probably New Zealand's version of a capital gains tax. If you purchase a property and sell it within 2 years and you don't live in it, very generally, it's a 30% you'll pay on the profit that you purchase, on the profit you make off the property. If you don't make any money off it, you don't pay any tax. So generally you hold it for 2 years. But any insights onto?
Yeah, I think possibly there's a pretty good point there actually, that like obviously in individual tax circumstances should be speak to your own accountant, but I know that a lot of the people that we're speaking to that have done their due diligence have found that ultimately for those tax changes to benefit them, they need to ultimately end up being tax residents here.
Yeah.
So yeah, that's by far by no means tax advice, but yeah, you should definitely make sure that you've taken personalised advice on that with your own accountant.
And look, that seems to be the generalised feedback we have. And it's apartment buyers from Australia over here about 4 weeks ago looking to buy one apartment and they ended up buying 5. His words were, why would I invest in Australia? It's madness now. So, yeah, as Dara says, look, get your own tax advice. We've got some accountants that we can talk to here if you would. But apart from that, thank you very much, guys. It's lovely to have you all in the same room. And we thank you so much for your specialist advice. Look, all of everyone's contact details are going to be available. So if you've got any questions you want to fire through to anyone, you'd be more than welcome. But apart from that, thank you very much and look forward to another session with you all later on in the year.
Thanks, Richard.
Thank you.